Hey everyone, I'm Craig Veroni with RE/MAX Masters Realty, your local real estate agent here in Vancouver, BC. In today's video, I'm going to talk about what's happened in our Vancouver real estate market through the month of June and what's coming that could affect that market. Of course, the big news is the recent 1% interest rate hike, and I've got two very special guests today that are going to be joining me to talk about that. I shoot a ton of videos about what it's like to live, love, and own here in Vancouver. So if you haven't yet, please hit that subscribe button and don't forget to hit the bell as well so you can be notified the moment I have a new video out. I really want you to be able to stay up to date on all the latest tips and insights into the Vancouver real estate market so you can become an expert too. So let's jump into it. The Real Estate Board of Greater Vancouver reports that residential home sales in the region saw a 35% decrease from those homes sold in June of 2021 and a 16.2% decrease from the homes sold in May of 2022. Last month's sales were 23.3% below the 10-year June sales average. Interest rates and housing supply increasing, Metro Vancouver home buyers are operating in a changing marketplace at the beginning of this summer season. Home buyers have more time to make decisions and more selection to choose from than they have at any time over the past year. Rising interest rates and inflationary concerns are making buyers more cautious in today's market, which is allowing listings to accumulate. We're seeing downward pressure on home prices as we enter summer in Metro Vancouver due to declining home buyer activity and not increased supply. To meet Metro Vancouver's long-term housing needs, we still need to significantly increase supply. The MLS Home Price Index Composite benchmark price for all residential properties in Metro Vancouver is $1,235,900. This represents a 12.4% increase over June of 2021 and a 2% decrease from May of 2022. If you want to stay on top of the market, knowledge is key, and the SnapStats market reports are a fantastic way to arm yourself with tons of knowledge about your market area. To download the full reports, simply click on the images below for either the Metro Vancouver, Greater Vancouver, or Fraser Valley report. Now, if you're watching this on YouTube, down in the description below is a link to a sample report. Please go ahead and review that, and if you think that it's something of value, and trust me, you are going to love these reports, simply fill out your name and email address to start receiving those reports immediately. As I mentioned, we got two very special guests today. Sal Toosi, a fantastic realtor here in Vancouver and a good friend. And of course, you know Reza Sabour, who was on last month chatting with us, mortgage specialist extraordinaire. And we're going to be talking about, you know, what Sal and I are seeing in our business, what Reza's seeing on the mortgage side. Of course, you know, the big news is the 1% increase that just happened the other day. So we'll be talking about that. Let's get going.
I think one of the first things I wanted to touch base on was what we read on the media. All the headlines about market is crashing, prices are like 1 out of 4 property owners must sell their houses if the rates keep going high or up. So the first thing I wanted to talk about, Craig and Reza, was like a lot of these headlines, they're called a headline for a reason. They want your attention, they want to make people emotional, and they want you to click on them. And I wanted to make an example of the same headline I talked about. 1 out of 4 property owners have to sell. And I will have Reza to help me going through this. 45% of the mortgage holders have their rates on a fixed rate, which means by changing the rates, their mortgage payments are not changing. So they don't have to sell their property because their monthly payments and budgeting is not changing. Let's talk about the 55%, the rest of the crowd, which again, almost half of them, correct me if I'm wrong, have a static mortgage variable, which means their monthly payment don't change, only the amount of interest payments change on their monthly payments. So now we are down to 25% of the property owners who are on a variable mortgage payment, and by changing the rates, their monthly payments are also changing. So if this headline is accurate, that means everybody who owns a mortgage on a variable rate is going to sell their homes, which is a little bit too exaggerated. So yeah, my first tip to my audience and our audience is do not believe everything you read on the media.
That's a great analogy of breaking it down and making it make sense. I mean, Reza, you can chime in and weigh in on this, but the banks are counting on you to panic right now. That's what the banks want. The banks smell blood in the water. That's why you're getting phone calls all the time saying, do you want to lock in? Because they really want you to lock. What's the fixed rate right now?
Yeah, so the fixed rates right now are north of 5% for the most part. We've seen a slight reduction in fixed rates over the last few weeks just because the corresponding bond yields have dipped a bit. But generally speaking right now, you're looking at a 5% or higher interest rate. And Craig's right, because if a bank calls you right now and they're enticing you to fix your mortgage, you have to remember the fixed mortgage products are the most profitable form of mortgage product for the bank. So they would love it if you came in and fixed. It also anchors you to the bank for a much longer period of time, because once you fix, you have a very large penalty to get out of that mortgage, and the bank knows that. And so especially if that's your main bank, you've got your payroll, your car payments, your other loans and stuff all there, and then you fix your mortgage as well, chances are once you have more than 3 products with the bank, you're not leaving. It's just too much stress and too much hassle to change everything over to a different lender. So yeah, there's a lot of truth to that. And of course the big news right now, as of a couple days ago, was the major Bank of Canada announcement where rates went up 1 full percentage point, 100 basis points. The overnight lending rate's now at 2.5%. But as I said to my audience on a live the other day, you want to keep that in perspective because the bank and the feds, the central bank has been announcing from the very beginning of these rate hikes that their target for the overnight lending rate is north of 3%. So we still have some room, and I hate to break it to all of our audiences, but we're likely going to see more rate increases before the end of this year, maybe up to another full percentage point. But as history has been a great teacher for us throughout other times where we've gone through this, that's likely going to be where things start to plateau. And usually by the following year, maybe 3/4 of the way through 2023, if everything goes as economists are predicting, we should see a dip back down in rates. And the government's goal is to get inflation back down to 2% by 2024. So keep in mind that these things are all relative. We have to keep it in perspective. It's short-term pain, long-term gain. And so this is my advice to not necessarily fix right now if you can avoid it. But of course, if you can't and it's a cash flow issue, definitely call me. We'll have a conversation.
Yeah, I mean, I had to call my bank and get them to increase my monthly payments because I'm on one of those, variable rate mortgages that's static. So when rates go up, I need to call them. It doesn't automatically happen.
Yeah.
So with all the, this is the 4th increase we've had, and I just got the mortgage maybe 6-7 months ago. So
yeah.
I am paying a lot more monthly for my mortgage right now. However, I understand that this is temporary, right? This is going to be something that we'll move through, and rates will come down at some point eventually. And if I went to a fixed rate right now, I'd be paying so much more per month.
The sticker shock of fixing right now, the average variable rate customer over the last couple of years had a very good discount of anywhere from 0.5 to over 1%. So even with prime now being at 4.7%, most people are still under 5% if you had a variable with a discount of at least 0.5% or higher. And if you were to go ahead and fix right now, you'd be fixing into something that's right away going to be almost 1.5% or 2% higher, north of that 5% range. The sticker shock alone would be quite significant, and plus you wouldn't be able to take advantage of the downturn once this cycle that we're in sort of stabilizes, because in a couple of years when rates do go back down, your payments will go back down. If you're in a static mortgage, the principal and interest will start to be more in your favor again. And so if you lock in, you miss out on all that opportunity. And I always take the approach with my clients the same way an investment advisor would. When you're investing money into the markets, you're dollar cost averaging by putting it in every month, regardless of what's happening in the market. Because in the long run, your horizon is that's going to pay off for you with the compounding. When you're managing your debt, it's largely the same. You have to think about it in the same way. We're going through a period right now where it's up and down, but if you fix, it's kind of like pulling all your money out of the stocks when it's low.
Yeah.
It's going to take you forever to recover if you put it back later.
Yeah.
It's the same kind of concept. You just have to try to ride this out knowing that it's going to benefit you later.
I have to use this quote because another great mortgage specialist and a good friend of mine, Alex McFadden, you know
Yes,
Alex.
very well.
He was on earlier this week, and he said something fantastic that I just love because it just stuck with me so much, and I've been quoting him on it ever since. He said, "You marry the house, you date the rate," and I love it.
Yeah.
You know, that's exactly.
Yes.
It's exactly true.
Yeah, it is true. Yeah, and because things fluctuate, things change, and you have to remember, you know, we're not in a period of time right now in real estate, especially in Vancouver where prices are so high. We're in that short-term, you know, flip type situation. Those days are kind of largely gone right now. It's a long-term game. You have to have a longer term horizon if your goal is to come out on top with your interest rate. So, you know, keep that in mind. But of course, as I say to all my clients, it's a personal choice. It's a cash flow issue. If you're really struggling with your cash flow, fully understand that, because a lot of people are. There are options you can choose to fix, and I'm not going to say that that's not the right decision for you if that is the right decision for you. So, you know, what I'm saying or what we're saying is the general advice, but it is obviously very specific to individual families and what you're going through financially.
Mm-hmm. Sal, you know, because we're both real estate agents, so what are you seeing in your business at the moment with your clients?
Yeah. So I think I want to follow up on what Reza was mentioning about perspective, which is very important if you are a buyer or seller in this market. It's so funny, Craig, for me to see a lot of buyers who are first-time buyers and looking for example, a $600,000 condo in Lower Lonsdale or downtown, are now sitting on the sideline hoping that is going to crash. And it's not going to happen because the entry-level products are almost always competitive. There is still a lack or a low inventory in this market.
Absolutely.
So I see a lot of, or even detached houses in North Vancouver, I see the nice ones that are listed are still going over asking. So I think perspective is something I wanted to touch base on and I wanted to explain. It's so important what you are buying, or if you are selling, what market you're in, what are the competitors, who are the key players, and study that market regardless again of the media and what the media is telling you, right? So another point is about the people who are renting and now are questioning should they buy or not.
Right.
A very simple calculation will tell you that in 3 to 4 years, if you buy today instead of renting for the next 3 to 4 years, you're always ahead of the market because the market will appreciate eventually. So if you're renting, don't hesitate to get into the market, get into the right market. And if you're thinking about buying a small condo, that's a very different story than buying a multi-million-dollar house in West Vancouver or Shaughnessy. So I think my biggest advice for a lot of buyers out there is to know exactly what market they're in and get the right advice.
That's fantastic advice. I mean, I have a lot of clients who have been coming in from out of town over the last few weeks. I've sort of had international clients weekly from Hong Kong, the UK, New York, LA, and you know, all of them have been coming on reconnaissance missions to see what's available, not necessarily thinking that they're going to be buying right away, and yet almost every single one of them has found a home that they want to buy because they've got more time. They can take their time, we find the right product, and they're finding great homes that there's no competition on right now, which is great, and we can actually negotiate a below asking price for. So, you know, your advice is great. It's a personal and unique situation for everybody. You've got to work with great realtors who understand the market, understand, you know, the local market and what's going on, and can help you find the best solution for yourself.
100%. It blows my mind to see all the buyers buy in a seller's market. When there's a lineup for open houses, everyone wants to buy. Like in the last 2 years, our phones never stopped calling with the buyers who want to go to the lineup, either in pre-sale centers or the open houses. Now that the market, we have more inventory, we have more options, we have a little bit leverage to negotiate, there is a little bit more time to do your due diligence, everyone's holding back now. So it always blows my mind to see how buyers are buying in seller's market. You know what I mean?
Yeah.
So again, another great opportunity for a lot of buyers. If you own a few properties, your situation is different from someone, again, who is renting right now. So we're not saying everyone has to buy right now. But if you read the media and you think this is the worst time to buy, that's not always the case. You have more time now you can send offers with subjects, something for 2 years.
Yeah.
I kind of forgot what subjects are.
It's a normal market, right?
Yeah. And honestly, on the mortgage side, we really appreciate having subjects back.
Yeah.
Because it's really difficult sometimes when you get a call from a realtor or a client saying, I've got an accepted offer. I'm like, great, what did the house look like? Haven't seen it yet.
Yeah.
Okay, have you done an inspection? No idea what it looks like. I've not done an inspection, no appraisal, nothing. And so these are the situations that we sometimes fear in our industry, because then it's on us to get the mortgage approved, and sometimes it's actually not going to work out. And one of the biggest things too that I would advise you guys to be aware of is that right now, one of the major things that's also changed with these increase in rates is the stress test quietly changed. Mm-hmm. So no one talked about this in the media. I tried to look through all the internet looking for an article, a reporter, anybody who also mentioned that the stress test quietly also is going to change with this 1% rate increase, because it's not just about the rate increase, it now pushes the threshold of that current 5.25 stress test is now, in most cases, not applicable anymore. So if you have an existing pre-approval and you still haven't bought yet, depending on the lender that you're with, you may have to renegotiate that pre-approval now and change the amount you're qualified for, because by the time you buy, that stress test is no longer applicable. We only have 2 or 3 lenders who have already announced as of a couple days ago that they're not changing their stress test until August 1st, which is really nice because they're giving people time.
Some time, yeah.
But most other lenders, that qualification rate has already changed.
Okay, for our viewers, who are these lenders that are holding off until August?
No, we can't disclose specifics in that respect because it's going to change for everybody.
Yeah.
But it is industry standard to change when prime changes. The only thing is we haven't had prime be this high since 2008, which it was actually higher than it is now, which is another perspective thing. Keep that in mind, right? This isn't the end of the world. We've seen this before.
Right.
And in fact, in 2008, when the world was crashing all around us, the economy was also crashing. Very different situation here. Right now, Canada leads the G7 in economic growth. We are literally on fire. Our economy is running on all cylinders, with the exception of runaway inflation. And so all these rate hikes are really just trying to tackle inflation. Everything else with the economy is going relatively well, which is why a lot of economists predict if we do hit a recession, which I think we will, it'll be a short-lived soft landing, not a long-term recession, because again, the fundamentals of the economy are quite strong. But keep that stress test situation in mind, because the stress test has actually changed. And like I said, I literally haven't seen a single article. I've seen it from lenders, but I haven't seen it from the same media that likes to sensationalize everything else. They're quietly not mentioning that fact.
And this is a very major point and issue, speaking to your point of those first-time home buyers, right? If you've had that pre-approval in place, whatever that stress test is, and if it's increasing, that's going to affect your purchasing power by a significant amount, right?
I mean, it could be significant. It depends on the rate you had, because the rule for the stress test, not to get too carried away with the nerdy math, but it's the contract rate you're getting from the lender plus 2%, or the benchmark set by essentially the feds at 5.25. So whichever is the higher. Right now, prime has hit a mark where it's 4.7%, or fixed rates are at 5.29% already. So you're already qualified. If you're getting a fixed mortgage today, you're qualifying at over 7%. If you're getting a variable rate mortgage today, you're still not there. So you're actually going to qualify for more if you choose variable than you do fixed, which almost seems crazy to me that you would, just by the variance of your choice, be qualifying at different rates. But that's just where we're at. And we haven't been here for a while, so it's a lot of new information to absorb for consumers who are just now getting into the market.
And you were saying earlier that your advice to a lot of your clients is still to choose the variable rate product over the fixed product. The advice I generally give my clients is we have to look at the spreads. We have to look at the math. If you're an existing variable rate holder and you're in what's called an ARM variable rate, so adjustable rate mortgage, which a lot of lenders do have, which means your physical payment changes every time prime goes up or down.
Yes, I mean, you are likely still better off waiting if your discount is a decent discount. And we can talk about what your current discount is and do the math to see if it makes sense for you. I've yet to come across a client where it made 100% sense for them to fix because we're just fixing at such a bad time.
Right.
You're automatically increasing your payments, you're automatically increasing, your entire debt load by doing that. Now, if you're in a static payment, to which we were alluding to earlier, Sal mentioned that your payment doesn't change, and that's absolutely true, but something has to give there where your amortization is either going to be extended or the principal and interest variance in your payment's also going to be changing. If it gets to a point where it hits what's called a trigger rate, where the majority of your majority of your payment is now interest, or you're exceeding the allowed amortization, what's going to end up happening is your bank is going to call you and give you about 30 days to do something. They're going to say either you need to make a lump sum payment to bring this back into acceptable ratios, or you need to increase your payments to be able to do that. So if you're in a mortgage that's like that and you haven't done what Craig was mentioning of making manual phone calls and manually changing your payment yourself, if you've just not done any of that, you're going to be in for a bit of a sticker shock at renewal. So very important to manage your own mortgage if you're in a static payment, because the bank's not going to do that for you.
Exactly. Craig, I wanted to talk to the public a little bit more in a simple language, because what Reza is talking is fantastic, but a lot of people were like thinking about selling or buying. I wanted to ask you a couple questions because you're also very active in the pre-sale market.
Yep.
I wanted to know what changes you are seeing in that market in terms of like the developments or the developers or that market. Also, what do you think is the best recommendation for sellers these days? Because sellers are also freaking out, right? They're reading the articles, they're like 1 out of 4 should sell, prices are going down. So what do you think about pre-sale and the sellers? What's the best advice for them?
Well, my advice for anyone in any market is always the same. Don't buy or sell unless you need to buy or sell. I mean, there are always going to be people who need to purchase a home, whether they're moving from abroad here or they're changing jobs or they want to move somewhere else. There's always people that need to move for whatever reasons or need to sell or buy a home. If you don't need to, if you've just done a purchase or sale in the last year or two, there's no issue for you. Yeah. You're just going to sit and hold and enjoy your home. But those people that are required to find a home, purchase a home, or either sell their home, the best advice is to, as you mentioned earlier, manage your own expectations. And a great real estate agent will help you do that because we have the data, we've got all of the the knowledge about what's going on in your local market area, because every area is different. It's hyper local. Yeah. What's happening over in West Vancouver is very different from what's happening in Burnaby or Port Moody, the west side of Vancouver. Like, everything is hyper local. So it just depends on what your situation is, what your needs are, what your goals are. Speaking to pre-sales, from what I've been seeing recently, doesn't seem to be a lot of let up in the pre-sale market. There's one project in Coquitlam right now, Elmwood, you're familiar with. They sold 100 units in 10 days. And this is not uncommon. I've seen other projects. We've got O2 in Brentwood. There are just a number of different projects around town that are sought after, and people want to be in them, and people are snapping them up. And the pre-sale option for people is a great option, particularly if it's this entry-level, one bedroom or one bedroom and den first-time home buyer, because you don't have to worry about a mortgage payment for a few years, right? If completion is 2024, 2025 or later, you're putting a 10, 15 or 20% deposit down over a year to 18 months sometimes, and then you're not having to worry about actually getting a mortgage for that property until it completes, which is several years down the road. So you're riding out the current market cycle, you're taking advantage of appreciation that's going to happen in the market for that product.
And I can even say from a mortgage perspective, you know, some of us brokers, depending on the office you work for and the company you work for, we have access to rate cap programs. So, you know, I've got access to a really great rate cap program that we can hold rates for up to 18 months on pre-sales.
Wow.
So, you know, make sure that you're doing your due diligence when you buy a pre-sale to inquire about that, because it doesn't always make sense. It's not going to make sense for someone whose completion's in 2025 or even maybe well into 2024. But if it's in 2023 or, you know, within that 18-month window, there are programs for that. I mean, the rates are going to be a lot higher because the lender is hedging for the future. They have no idea what rates are going to look like, but you're always going to get the best of two things, either the cap rate or lower. So the lender at completion is either going to give you their best rate at that time or the cap rate. You're never going to go higher than the cap rate, which is really good. So you do have some form of protection for those people that are a little weary of pre-sales, or they're thinking, oh, it's 2 years from now, what if my financial situation changes? In many instances, you actually qualify now and you don't qualify again. And that's really important to know, unless there's been a very big material change in your life. So if you went and leased a Ferrari in between, you're SOL probably. But if you haven't done any huge material changes, you know, then the lender has no reason to go ahead and get curious as to what's going on in your life and pull your credit report again and start asking questions. Then you're usually okay with these programs. So,
and this is a great option, particularly right now for, as you said, projects that are completing in the next year or so, because those developers and those projects, a lot of them are offering 5% deposits. You know, it's a 5% or 10. So you're able to get in with just a deposit of sometimes 5% or 10%. You can get, you know, qualify now and get that rate cap for the mortgage if it's completing within the next year or 18 months. So there's lots of solutions and options for people out there, you know, and I encourage you not to sit at home and think the sky is falling and that you can't buy a home or you're not going to be able to get into a home. The most important thing you can do is reach out to someone like Reza on the mortgage side, or Sal or myself, you know, from the real estate side, who can connect you with someone like Reza, to talk about your options, because a lot of people are quite surprised that there's so many options available to them that they weren't even aware of.
Yeah,
Absolutely.
One of those options these days, speaking of pre-sales, is all those assignment deals. These are a lot of people who purchased a pre-sale, locked down a contract a couple of years ago with 5%. Now the project is completing in 6 months or a year. They're freaking out, or their finances have been changing, so they can't get a mortgage approved. And now they're letting go of their entire contract for the price they got 3-4 years ago.
Yeah.
Right? So
not in every case, but there are instances where you can, you know, because normally with pre-sales, with assignments, you're dealing with a significant lift, right? Because what they purchased the home at 3 or 4 years ago is very different generally from what it is now. But yeah, there are instances where you can pick up a home for the same price that someone paid for it 3 or 4 years ago.
Yeah, so back to what you were saying, there are opportunities. Don't freak out. Don't just believe everything you read on the media. Reach out to your local expert. This is who you hire matters, I always say, and I think this is more important than ever. Who you talk and get advice is so important.
Thank you both for joining me. It's always a pleasure chatting with you guys, and thank you guys. Hey, thanks very much for watching. If you enjoyed this video and you want to learn more about Metro Vancouver neighborhoods, I have filmed a ton of neighborhoods around Metro Vancouver, and you can check them out on this playlist here. And don't forget to hit the subscribe button here, because on this channel, you're going to find everything you need to live, love, and own here in Vancouver. So don't forget to subscribe.